Allergies, huh?
Yes, it is. All right. So again, this week we just went over chapters 9 and we went over chapters 10. So this is going to be dealing with the petty cash fund, the bad debt expense, and lastly, dealing with our interest and bank reconciliation. So let's go ahead and dive into the first question. So question number 1, okay? So we're dealing with, it's going to be in order of exactly what you've learned. So nothing is by surprise, okay? So this is, yes, this is going to be what should be expected when we take the exam, okay? So here we're going to look here and say on January 1st, you opened your store and needed a cash register, okay? And you estimated that maybe $300 should be good enough for the first week. I'm sorry, for the first day of your sales. So go ahead and record this register. How do you put money in this register? How do you record this transaction?
Check, checking account.
So checking is one of them. So let's go ahead and do the date. So 1st of January. Oopsies. 1st of January. Okay. What did you say, David?
Register number.
Register. Okay. Where are we putting this money in to?
A register.
Yes. Cash. You said registered number. Cash register.
Yeah, what number it is. Like you put 301 and 202.
Okay. I'm not quite sure what you mean by that. All right. And then, yes, we need to write a check or we need to go into the bank and pull out that money just so that we can have at least $300 in our cash register. Okay.
Yes.
So good. All right. All right. So at the end of the day, okay, at the end of the day, you counted all their sales receipts. And here is it. It is right here, down here below. We're going to be calculating all of them. And you had a total of $156.88 remaining in the cash register. Okay. So go ahead and when you calculate all the total receipts, the next thing I want you to do is to replenish the cash register with money, okay? Because you can't really do much if you have a whole bunch of cash, if you have a whole bunch of receipts and you need money to have just so then you can exchange it, okay? So the cash register now has a remaining of $156.88 in cash, okay? So here is a list of all the sales receipts that happened that day. So go ahead and calculate a total. So for check number 101, we had sales for $15.85.
143.12, yeah.
143.12. Good, guys. Okay, so 143.12. So let me go ahead and highlight this and make it bold. Okay. So yes, so we have a total of $143.12 in receipts, and we have a total of $156 in cash. Okay. So how do you replenish this cash register?
Just write check out for 143 full.
That is correct. Good. So it's going to be on the same day. So again, at the end of January, or at the end of the day. So 1st of January. What are you going to call these? What are these called?
Sales.
Okay. You want to be careful if you use sales.
No, that's what it says. The transaction of sales.
Right. But what is this right here? What do you call these?
Just cash sales. receipts.
Yes, they're cash
Those are
sales.
receipts.
Exactly.
Receipts, yeah.
So we're going to yes, we're going to do cash sales receipts, and in return, we're going to replenish our cash register for that same exact amount for 143 and 12 cents. So now how much money, how much actual cash is actually in my bank in my cash register right now?
300.
It's still 300. Good.
With 300 out.
Right.
Good. It's always still going to remain to be 300. Good. Because that's what we want. We want to make sure that the cash register always has $300 at the end of the day, at the start of the day, at the end of the day. So good. That's what you're going to journalize is your total cash sales receipts, and you're trading them in for a check with the amount of $143. Good.
Replenish.
Good. All right. On June 1st, your business is, your business began to pick up, and in the last few days, I forgot to write last few days. Your cash register was low on cash. Okay. So what you need to do is you're going to increase. You decided to increase the amount by $500 into the into the cash register.
Yeah.
So $300 is not enough. You need to increase the amount in it. So what are you gonna do in this one?
$200 in, so these aren't receipts, so this is going to be,
No.
cash register
Cash register, good.
Cash register and checking.
and checking.
Good. Cash register. Yes. Say that again. Yeah. For how what amount?
For the, 200.
Okay, we got one person saying 200. We got one person saying
100.
Yeah. Yeah, you decided to increase
It
it,
says you decided to
by
increase
five.
the amount by 500.
So that'd be it.
Oh, we're increasing it by 500.
yes.
Yeah, so
Right, now,
500.
yeah.
So
Exactly.
yes, the total
Right.
the total in the register is 800, but right now we need to increase the amount so we have a total of $800 in the cash register at all times.
Okay.
So good. Yes.
Yeah, on top of the 3. Gotcha.
Good. Yes. All right. Good. All right, and then I didn't do this whole sales receipt again, but at the end of the day, oh, did we write the date on here? Oh yeah, June 6th. Let's be consistent and do it correct. So June 1st, okay, so at the end of the day of June 1st, okay, you counted a total of cash sales receipts for a total of $684.52 and a total cash of $115.48. Replenish the cash register.
You just write a check for
$640,
$648.52.
or 80, yeah, 684.52.
Okay.
Cash sales register. Cash sales receipt.
Yes, we need to. We're gonna expense it, right? We're gonna trade them in, and we're going to we're gonna either write a check, or we go to the bank and pull out money for, yes, correct, for $684.52 is correct. So how much is now remaining in your cash register?
800.
You need to have whatever amount that you establish in your cash register needs to stay that amount at all times.
800, right.
So good. There you go. So that is the
It seemed harder yesterday.
no, that is right. I think because I made the cash register kind of more easier to understand is because
Yeah,
this is what really happens in real life. you need to have money in your cash register at all times. If you don't, and you open up your sales, you're gonna have to make an emergency run out to the bank in the middle of your doing customer sales. It's like you need to make sure that at the end of the beginning of the day, you have enough money to do those sales. So yeah, good. Yeah, good. All right. So questions 5 through 10 are related. Okay. So number 5 on June 15th, okay, customer A purchases a total of 100 toys for $5 each on account, okay? Sales tax is 8.25%. Record this transaction.
I got toys, sales, and sales tax. With the categories.
You don't write toys.
Oh, that's what they bought. Toys.
That's what they bought.
Okay. Accounts receivable.
Accounts receivable would be correct. So let's go ahead and record the date. So what was this? June 15? All right. Accounts receivable because they owe us money. Okay? But in other forms, we are receiving some form of money, right? This is them giving us an IOU, receivable. And we need to recognize sales and sales and sales tax.
Tax is 41.25.
Sales tax payable.
That's
Okay.
payable.
Hold up. And how much was the sales tax again?
41.25.
41.25. So 41.25.
$541.25.
$541.25. Sorry about that. So they owe us in total $541.25. Okay. Customer A does. Okay.
Customer A.
Okay. So then on July 15, we received a payment check for $50 from customer A. Record this transaction.
Checking and accounts payable.
Okay, but which way? What are we recording first?
Checking to debit to $50 and accounts payable for credit for $50.
Well, do we owe the money?
No,
No, we
we
received it.
received,
So it's accounts receivable for $50.
Yes, accounts receivable. Okay, remember, we're not dealing with vendors, we're dealing with customers. So we're receiving the money. So therefore, yes. So I'm gonna go ahead 15 July, and that is actually correct. So we are gonna be receiving a check. So we're gonna write checking. And then we are decreasing our accounts receivable, right? We're lowering the amount that this person owes us. Okay? And we're going to decrease it by $50. Okay? Good. All right. So then on the 7th, number 7, on August 15th, customer A refuses to pay for the remaining amount. Okay? So, well, how do you record this?
Okay,
Allowance for
allowance,
doubtful debt.
doubtful account.
Mm-hmm.
Yeah. And then accounts receivable.
Yes. Good. Okay, so let me see what is August 15th. So AUG. Okay, let me just stretch this a bit to the side just to make it a little bigger. Okay, so yes. Okay, so first, that's correct. You're going to recognize that you need to do allowance for doubtful accounts because they are not paying for us. I'm going to put doubtful ACCT, okay? And we need to remove the money that she owes us.
Yes.
Okay? Can anyone calculate how much she owes us?
$491.25.
How did you get that?
Oh, sure. Now you're asking me the math part. I got the 540 minus $50. She already paid.
Yes, good. She already paid a portion of it. So yes, we got 491 and 25 cents.
Well, I did have a question for you.
Yes.
Now, in that total amount,
Okay.
I know sales tax was in there.
Yes.
Do we write that off also? Because that was included in there.
But she didn't pay for it yet.
I know, but seeing how she can't pay her what she owes. No, she still get sales tax still charged.
Why? She hasn't paid. She hasn't paid. We're not returning anything from her. This is what she owes us. She owes us that sales tax.
Okay.
Are you saying that we should separate it?
Or should we? No, I was just asking. Should that be included? The sales tax included when someone bounces the check or owes us money? Should we take the sales tax out of it?
That's a good question. And for this scenario and for this case, let me see. Where is it? Sales tax. Okay, so this is how it is. Okay, I don't know how to explain it. Because we made a sale, right? We charged it with tax. That's correct. You would assume that if you're going to write off the whole thing, that the sales tax should be taken off. But the thing is, we never made the sale, so in other words, we made the sale, but she's just not paying us. So in other ways, we actually have to pay for that sales tax.
Yeah,
But
because we're still liable for it.
we're still liable for it, but it's in reverse that we're basically taking that off. So therefore, whatever amount because we're basically reversing the sales, right? If there's no sale to begin with, then there's no tax to be charged.
Okay, that makes sense.
Okay? Is that okay?
Sorry for confusing you.
No. That's a good question. That's a very good question because if we never made a sale, therefore there is no tax. And we're trying to clear off her debt. So that's her debt including the sales tax, but in this case because we made no sale, there is no sales tax.
Okay.
So there is no reason to have to separate it.
Okay.
I don't know if that makes any sense okay. Okay.
It's making sense now.
Okay.
No, I was doing the answer and then doing the question. I came upon that. And, I went back and figured it out. And I was like, the answer I'm going to give you is $491.25. But then I'm going to ask you about the sales tax.
No, that's a very good question. No, that's a very good question. No, that's a good question. Because what we can do is we can say, for whatever she actually paid for, right? We can separate it that way. But the thing is, this is a total amount that she owes us, right? So it does include sales tax, but because we're telling she stopped paying her amount, then from there we're going to take away the sales tax too, as if we never charged her sales tax. Because we're reversing the transaction, right? So, but she never paid. She never made a payment to us, so therefore she doesn't owe us the sales tax. So we don't owe sales tax.
Okay.
Does that make any sense? If the customer gives us money for the sales tax, then yes, we owe that sales tax to the government. But in this case, she didn't pay anything at all. So therefore, if you look at it this way, it's like I charged you with sales tax. You didn't pay for it at all. Therefore, I don't owe the sales tax because the customer never gave me the sales tax to pay for it. I'm not responsible for paying for that sales tax. It's the customer that is responsible to pay for it.
Okay.
Does that make sense?
Uh-huh.
Okay. Good question, though. That is a really good question. That does make you think, too.
Right.
But in this case, we're basically making the account zero, as in, like, because they never paid.
Yes.
Okay? So, therefore, we don't owe anything. All right. So, good question. So, now that here we're at $491.25 that she no longer owes us anymore. Okay? Or she claims that she can't pay anymore. Good. Now so we contacted customer A and we contacted customer A to receive the debt that she owes us. But on October 20th, we received a pay. I think I was supposed to write mint here. A payment. Sorry about that. We were supposed to receive a payment of $15 from customer A. Record the transaction.
Checking. 15.
Well, you have to pull it back out of allowances for doubtful accounts,
Exactly.
Right, right.
and so you need to have that, have accounts receivable on top, and then that on bottom.
Good.
And you want to debit $491.25, and you want to credit $491.25.
Okay. So tell me, David. I have a question for you. Since you answered it correct. Why is it that we have to refund the whole thing? Why can't we just refund it for just that $15?
Well, because first you have to pull it out of account, and then you could charge that.
Yes, my question is why would you reverse the whole entire transaction? Why would you want to reverse the full $491.25?
Oh, because the way I thought it was you have to pull it out of like mothballs, and then make it active again. Then you could minus the $15 from it.
Yes. So in other ways,
We
this
zeroed
is
the accounts receivable. We zeroed on August 15th, so now establish that account in order to take the $15 off of it.
yes. So I guess to make this a little more sense, the reason why you have to reverse the entire thing is, one, we can assume if she's making a payment now, we can assume she has the capability to continue paying it off. Okay? So that's one thing. Second of all is this is one entire transaction. This is one entire bill. You can't separate a bill. You can't separate an item from a bill. Does that make any sense?
Yeah.
If I purchase 100 toys, I can't say, oh, she's only paying for 2 of them, so only take that 2 out of the bill. No, you need to reverse the whole entire transaction because the bill that we had for her was for $500, right? But now it's reduced to $400, so now we need to reactivate that bill, okay? And it's for the full amount, okay? So yes, you need to do it for $491.25. Good. And then now we can record the transaction.
Yes. And your description, you have 4 accounts: accounts receivable, accounts for lawful, whatever, pulling it out, the checking, and then accounts receivable.
Yes, checking and accounts receivable is correct.
Yeah, I just want to make sure I had that right.
Good.
Brain power to figure that out. And I didn't look at the other sheet.
That's fine. Whatever helps you get through these problems, right? And how much are we recording this payment for?
for $15.
$15?
Yes. We're gonna reduce her entire amount.
Yes,
Okay. We're gonna reduce the entire amount by 15.
yes.
Okay. Then on November 28th, a debt collector informs you that customer A has filed bankruptcy and can no longer pay can no longer pay. Record this transaction.
November 28th, allowance for doubtful accounts,
Mm-hmm.
476.25,
And bad debt.
and accounts receivable for 476.25. Am I in the ballpark?
Hold on, let's see. Let me see. Yes, the account is correct. So here we calculated all this, and that's correct. So let me see. We got to do the allowance for doubtful accounts again, because now we know for sure this person cannot pay. Allowance for
You need to change that name. That's too much to write out.
some people just put doubtful accounts. They don't even put the word allowance.
Okay.
But for this class, I want you to use the term allowance. Okay.
Okay.
What was and then accounts, and then yes, accounts receivable. And we know that it's for the total of 476.25. Yeah, 476.25. Okay. So if we were to actually apply it again, for whatever amount that she applies, it's going to include her portion of the sales tax, whatever it is. So every payment, just like when we do interest, right? You have to cover the tax that you pay for. So in this case, so every check that she wrote, it's a little portion of the sales tax. In this case, we couldn't sell we couldn't sell $776, but that is also including the sales tax for whatever amount it is. Okay. I don't know if that makes any sense. Okay.
Yeah. Okay.
So because we're no longer receiving this entire money anymore, it's including the sales tax that we've never received. Okay. So we're gonna have to write that entire thing off. All right. So number 10, December 31st. Our company estimates that $2,556 out of our $200,000 accounts receivables is uncollectible. There is currently a debit balance of $476.25, aka from customer A. So in the allowance for doubtful accounts, how do you record this adjustment record this adjustment?
Bad debt for $2,079.75.
2000.
For doubtful accounts for $79.75.
Hold on. Wait, give me 1 second. So yes, you had the accounts are correct. So bad debt expense, and this is going to be for the allowance for doubtful ACCT. Now, where did you get the number from?
I minus the $2,556
Uh-huh.
and $476.25. I minus them.
Okay. Now, let's do a quick review. So, you're on the right track, except you subtracted, and that is actually incorrect.
Okay.
Okay.
Accounts receivable is subtracted.
It's adding or subtracting.
Oh, you want to confuse me now? Okay.
No, because okay, so here this is an adjustment entry, correct? So here we recognize that our estimate is 2,556, right? We recognize the word accounts receivable. We recognize that, so we know that we're doing the balance sheet statement.
Yeah.
So the key factor here is determining what the balance of the allowance for doubtful accounts is. If it's a debit balance, what do?
Add.
We add. Correct. And if it's a credit balance,
Subtract.
we subtract. So David, you just did the opposite thing. So instead of subtracting the $476.25, we're going to add it.
So it's 3,032.25.
3,032.25 is correct. So 3,032.25.
I figured you might ask me about how the math was, so I wrote it on top.
Okay.
I did.
Okay. So good. And we reached to question 10. So good. So yes. Okay. This is a perfect example of what happens in real life. Okay. This is where this debit balance comes from, is because customers here, they come in here, they say, oh, I can pay you. Oh, I can't pay you. Oh, I can pay you. Oh, I can't pay you. Like customers, right? They'll confuse you. And, in most cases, if they said that they can't pay, they're not going to pay you, and you go ahead and say no, and if you just continue having a debt collector try to poke at them, try to contact them to pay you, they're going to either give in or they're just going to brush you off. And maybe it's like 2 years later, right? You're sick and tired of getting this letter from this person, but it's because you owe them, But then again, when you get there, it's like, fine, I'll pay it, kind of thing. Or if anything, let them figure out after 2 years of collecting money from you that they're not going to get anything, then they'll write it off completely. So yes, so that is a perfect example of how a live action of a person trying to return, trying to buy, trying to expense stuff, and then here is where we accumulated our total amount of $476, and allowance to doubtful accounts is currently debited. Okay, so that's where here we have a debit balance of $476.25. All right, good. Okay, so now questions 11. Oh, wait, there's question 11. Okay, perfect. So all of these are separate, okay? So on December 31st, I think this whole entire worksheet has 16 questions.
Oh, does it?
Yes, 16 questions. So,
It does.
yes, so we just finished about maybe like half of it already. Or 2/3, sorry. So now we're going to be looking at this, okay? So question number 11 on December 31st. I was just making sure that it wasn't connected. I don't remember. This happened really fast yesterday. So here on December 31st, your company estimates that $2,430 of its $500,000 total credit sales is uncollectible. There is currently a debit balance of $1,500, okay, in the allowance for doubtful accounts. Record the adjustment entry is or should be
Bad debt and allowance for doubtful account.
yes. So good.
And you want to add the 2,430 add them to the 1,500.
Okay.
For a
Let's be.
total of 39.30,
Right.
right?
Let's be careful. Okay, let's read it again. On December 31st,
The total credit.
your company estimates that 2,430 of its $500,000 total credit sales is uncollectible. Okay?
Total credit sales
Say that again?
The total credit sales is the key word, right?
Yes.
Okay, so you're gonna subtract that.
And you have a debit balance, so debit's add.
Okay. Now let's review this again. If we're looking at total credit sales, which statement are we looking at?
Income statement.
Income statement. Okay, good. So when we're looking at the income statement, do you ever see accounts receivable?
No,
Do you ever see an allowance for doubtful accounts?
no,
So therefore, do you care about this debit balance in the allowance for doubtful accounts?
no.
No. So what is the total amount here?
2,430.
Yes, 2,430. Okay. So make sure that you read carefully, okay? All right. So I'm going to go ahead and
Okay, so you don't have, oh, okay, yeah, I get it now.
yeah,
Since they don't deal with accounts receivable.
exactly.
And yeah, then this other part doesn't even matter.
Yeah, it doesn't matter. No. Okay.
Now,
Oh,
see the word total sales, that don't matter, okay.
okay. Yes.
But now, how did we do that? We did, what was a bad debt expense was, okay,
Yeah.
bad debt and then the, allowances, okay.
Okay. All right. On number so number 12, on December 31st, your company estimates that $2,430 of its $500,000 accounts receivable are uncollectible. There is currently a debit balance of 1,500 in the allowance for doubtful accounts. What is the adjustment entry?
Bad debt and allowance for doubtful accounts.
That's correct.
And
Okay.
you want to take the 430 and add 1,500.
Why? What makes you come to the conclusion to add?
The word debit.
Yes, debit means to add. So now, what? And then what's the other key term word that allows you to make this decision?
Accounts receivable.
Accounts receivable. That is correct. So what is the total amount now?
3930.
Yes, 3930. Oopsies, I put 36 on the 3930.
And for the next question is
Wait, are you talking about the problem, or are you talking about you have another question?
oh no, I don't have another question. The next problem.
Oh, okay. All right, hold on. Let's make sure everyone understands. So, because we're dealing with the balance sheet, right? The balance sheet does have accounts receivable, and it does also have an allowance for doubtful accounts. So so what we do care about whether there's a debit balance or a credit balance, right? And in this case, we recognize debit, so therefore we need to add the amount because we know that allowance for doubtful accounts must always have a credit balance at the end of the day. Okay? So, good. Good. All right. So, question number 13. On December 31st, your company estimates that $2,430 of its $500,000 accounts receivable are uncollectible. Uncollectible. There is currently a credit balance of $1,500 in the allowance for doubtful accounts. Record this entry. The adjustment entry should be
Bad debt and allowance for doubtful accounts.
good. Okay.
Or 2580.
For 2580, where did you get
You're
25?
You're adding the 2430
Just
plus
subtract
the,
it.
since it's credit account, credit balance, then you're adding, you're not
Credit
subtracting.
subtract.
Oh,
Debit
credit,
add.
oh, okay, I mixed it up.
I did too.
Yeah, credit
I quickly
subtract
fixed
and debit is add, okay.
Yeah.
Okay, hold on. Let me go ahead and send.
I remembered it.
So what is the total?
$903. Is that right?
Yes, that is correct. $930 is correct.
Yes, I just subtracted. The 2,430 minus the 1,600.
Good. Okay. So lastly, question number 14. It's going to ask you on December 31st, your company estimates that 2430 of its $500,000 total credit sales is uncollectible. There is currently a credit balance of $1,500 in the allowance for doubtful accounts. The adjustment entry should be
Bad debt and allowance for doubtful accounts.
that's correct.
And the a debit and credit is a 2430.
Yes, 2430. And how'd you come to that conclusion?
I saw the keyword total credit sales,
Right.
and I blocked everything else out. I just remember that one number.
Yes, good. Remember, because when we're dealing with total credit sales, we're dealing with the income statement, and therefore the income statement does not have the accounts receivable or the allowance for doubtful accounts, so we do not care for it. So good. So yes, the answer is 2430 is correct. Good. All right.
That was real good.
Say that again.
You see,
That was real good, because I forgot about that.
Yes, so this is going to be exactly what you're going to see on the exam. So make sure that you be careful, because a lot of students they still fail to remember this really small significant thing, and they always do this. They see the total credit sales, they ignore it, and they just go right into the debit and credit. Okay?
yes.
All right. Good job, guys. So now we are going to move along into problem number 15. So number 15, okay, is going to be a little, I did simple interest just because for the sake of you guys not having Excel or complicated, I mean, you guys do have Excel, but just, I don't know, were you guys able to be able to work out the problem yesterday with using Excel?
I never got to
I didn't even
Excel.
try.
That's okay. That's okay. Don't worry about that. So here, I only want you to focus on simple interest. Okay? So,
I'll admit that I didn't finish this one because this question because I got confused. Like 150 days, 8 months. Now, how to break that down?
no, that's fine.
So that part confused me.
Okay, so let's go ahead and take it one step at a time. What is the formula for simple interest?
Principal times the rate times the time.
Okay, so let's look at our numbers. So 28,000, okay? We're going to start with our principal, right? 28,000, okay? And our rate is 4.35%. So what are you multiplying?
It's gonna be $1,218.
Okay. And then now we need to determine, well, what is 150 days?
150 days is
Yes, it is 5 months because for 1 month is 30 days, correct?
Yeah, it is 150 each.
Okay. If you were to take 150, you divide it by 30 days, you're going to get
Yeah.
5 months.
5, right.
And we want time to be in years. So how many months are there in a year?
12.
12. So we're going to figure out what 5 out of 12 is.
Um, that's 0.42. That's, I didn't do that right. Uh,
5 divided by 12?
Yes, because that's what we're looking for, right? We're only looking for 5 months worth of time. So that means this person is going to take it out within 5 months.
So it's point 4166666666666.
Okay, and then what was our number that we originally got?
Oh, $121.80.
Where 120? What? Where are you getting this number?
Ah, did I write it down wrong? 121.80. 2,800 times 4.35%. 121.18.
Can you explain your math again to me? So you did 0.416.
0.1435.
Where?
That's what the question is. I moved the decimal place twice, and so that gives me 0.0435.
Okay. Oh, okay. So I see what you did there. So you did 0.43. Okay, so you did 0.0435, and you multiplied that by 0.416.
Take 2,800 times
It's 28,000.
0.0435
Uh-huh.
times 0.416 equals $506.
Okay. All right. So then what you can do here. So instead of doing no, you got it right. It is $507. But for this exact problem, what you can do is keep the time as a fraction. Don't calculate 5 divided by 12, okay? What you can do is you could do this. So you could go ahead and do 28,000. We're going to multiply that by the 0.435, and then you're going to multiply that by 5, and then you're going to divide the whole thing by 12.
Okay.
And you should get
$507.50.
yes, 507. And what did you say? 50.
50 cents.
Hold on, let me double check those numbers.
That's what my calculator says. 507.5.
Okay, hold on.
It's known to be wrong too.
Yeah, I got 507. No, I got 507 something. That's not right. Try that again.
So yeah, I know that no, that was right. 507.5 is correct. Okay, that is the interest that you are going to collect on top. That's how much you're going to collect on the principal. So what is the total of the future? What is the future value of this problem?
The interest and the total interest plus the principal.
Okay, good. So what do you get?
2,800.
28.
It'd be 28, 507, 50.
Good. And that is correct. Okay. So you don't have to calculate 5 out of 12. You could just leave it at 5 divided by 12. And what you could do is you could just multiply across and then divide the whole entire thing by 12. Okay? It will get you essentially the same exact answer.
Okay, so the month, you can you just put up there and divide the entire thing by 12. Principal times the rate times the month divided by 12, right?
Yes.
Okay.
Times 8 divided by 12. So let's go ahead and do the second problem first. So what is our principal?
$147.50.
Mm-hmm.
And the rate is 6%.
Mm-hmm.
For 10 years, and that's the time.
Mm-hmm.
You take that, you take the principal times the 6% times the interest, or times the time. That was 30, 88, 50.
Yeah,
Mhm.
88.
So I don't know if you're crazy enough, but if it takes 10 years to only accumulate almost double the amount, I mean, that is 10 years from now, like that's a long time just to make $3,000,
Yes.
right? But that's okay. So then what is my future value now?
82.36.
Is Andrea, did you get that too?
No, not yet.
No, I did not get that. Hold on. Let me do this again. So 5,147 50 plus. Oh, actually, I did get the 82. Did you say 82.36? David? Okay, 80, yeah, I did that.
82.36 even.
That's perfect. Yeah, that's actually right. Okay.
0.039.
Andrea, are you okay?
I'm still trying to get to that figure.
Andrea, what is the formula for future value?
The future value is the principal times,
Not times.
not times,
We're looking at future value.
principal divide.
Not divide.
The way I did it was I did the principal times the rate.
You're solving for interest.
Oh, right. Oh, exactly. Okay.
So now my question to you is what is the future value?
Future value is time, the years, the time divided, no, the interest divided by the time, the years.
Okay, again, let's do this again. So interest. What is the formula for interest?
Interest is the, 28,000 times, I'm sorry, wrong, I'm at the wrong point. There's
Andrew,
the principal times the interest, and then the, times the years, number of years,
Mm-hmm.
and then divided by.
No, that's it.
Divided, oh, and that's where I messed it up.
Why are you dividing?
Because I need to do,
Andrew, one thing that helps me is to write the problem up top, like your equations. You know, like your
Yeah.
principal times your rate times your time. It will give you interest. And that's one formula. And then the other formula is the interest plus the principal. It will give you the future value. That's another formula.
Yeah.
interest plus the principal.
And
Yes, and that's future value.
Interest plus the,
the
Okay,
principal
so I would
times the
take-
rate times the month divided by that by 12.
Right.
For, to figure things out. That helps me to write the equations up top, and then put the principal up there, and the rate, and put that up there, and the time, put that up there. Then figure it out. It helps me by having little formulas sitting on top of it.
Yes. Good job, David.
yeah, seriously.
That's
So,
why I try to make it as simple as easy as possible.
is that, 8,236?
Yes, that's correct.
Oh, okay,
That's correct.
all right, so the principal times the rate times time.
Is
No,
that's
plus
interest
the,
That's it.
yeah, and then the interest plus the principal
is future value.
is the future value, okay,
Yes.
gotcha, I'm writing this
It
one
just helps
down.
me write the, it just helps me write the formulas on top, and that way I can just
Yeah,
plug things in.
it does, right, it does. Thank
Instead of
you.
having to try to remember them.
Yeah.
Right, yeah, and with writing it down like that, eventually that'll just sink in that that's just the normal way you do it, okay.
Yeah.
Yeah,
Okay.
okay, great, thank you.
Yeah, you're welcome. I figured thinking about it like that makes it a little easier, and if you
Yeah,
can see it.
right,
You can
right,
see like the P's, principal, the R's, rate, everything, and then just figure out the months, and the time, and divide that all by 12. Lynn gave me that equation, so
Yes.
right, and
I just
so,
put it
and
all
so
on
the,
top, and it helps me out.
so you've got the principal times the rate times time equals the interest.
Yes. Pretty. Remember pretty?
Ah, yes, pretty, okay.
And then the interest plus the principal equals the
Future value.
Is the future value, okay, now I got it, cause I'm like, oh my goodness, how is this supposed to go? That makes sense, that's
and
good.
then you just and then you just divide all that by 12 to and figure out your month.
Right,
Yes.
okay.
All right. So, okay. So yes. So that's why I kept asking you. So what is the formula? What is the
Yeah,
formula? What is the
right,
formula?
right.
Because the ultimate thing is like if you don't know the formula, then you don't know what you're
Then
doing.
you can't do it right.
Yes.
You get totally lost.
Okay. So let's go ahead and work on the last one together.
Okay.
So the last one is going to be find the interest for this last one, which is for $684 and $684,150, and the interest rate is going to be 3.49%. And how many? The time is in 8 months.
You do this one, Andrea.
Is that, well, that's too high, okay. So I'm taking, my, 684,150 times 3.49%, and that gives me 230, 23,876 .84.
Yeah, keep going. You didn't take it far enough.
Keep going.
Oh, you know what? Oh, yeah, that just gave me 3. Okay. And then, let me just do that one. Put that in there. 2, 3, 6, 9. And then plus my principal.
Wait, hold on. What did you get for
No,
interest?
no. Okay, for interest, I got the, oh, wait, hold on just 1 second, let me do this again. Okay. 6, 8, 4, 1, 5, 4 times 3.496 is 23,000, 23,870, no. Oh, no, 200, no, that can't be right, that's too high of a number. I think I don't have my calculator on here right. Just a minute.
Well, you're right. It's going to be a high number.
It's a really high, okay, let me,
Yeah,
okay, so
it's a
let me
real
try.
high number.
Okay, oh, good, okay, because I'm like, this can't be right. Okay.
It is a high number.
6, 8, yeah, 4, because we're doing the 684,000.
Yes, exactly.
That is a big number, times 3.49% is 230, or 23,876.84.
Okay.
That's my interest.
No, that's nope. That's not your interest. You're not done yet.
No.
Oh,
You-
times the 8 months, yeah,
Yeah.
times 8 months, times 8 equals, $91,014.72.
Keep going. You're not done yet.
No.
You just did you. So this is 8 months, not 8 years.
Oh, 8 months, that's right,
Time is always going to be valued in years. So we need to convert the 8 months into years.
okay, so that's,
Divide that all by 12.
by 12. I got, 15,917.89.
Yes.
Ah, all right.
Okay. Let me see if you need a visual, because I think that's where you're not getting it, because I'm not giving you a visual. So if I were to punch this formula in right now, right? If I say interest is equal to P P times R times time, right? So what is my principal? 684,150, right?
Right,
I need to multiply that by my I, what by my R. What's my R?
and my R is 3.49%.
Exactly 3.49, and then I need to times it by my time. What's my time?
But the time is, 8 months.
8 months.
Yeah, 8 months,
But I need to make sure, because I need to be measured in years. So what is 8 months out of 8? So you can leave it in your calculator like this, where you could multiply it by 8 and divide the whole entire thing by 12. Okay?
Okay,
But if I were to just convert this in right now, what is 8 out of 12?
4 months, no, I'm sorry.
What is 8 months out of 12? Hold on 1 second, okay?
Okay.
Yeah.
I'm so sorry, guys.
Oh, that's okay. Oh. Andrea, it just helps me out. That helps me by having the formula sit on top, and that way I can just punch in numbers.
But when you're saying 8 months out of 12, I mean, that's, what, like 3/4 of a month, of a year. So that's,
What did you do?
I went to click the door closed because you not hear what Black is doing right now? It is so freaking loud.
Oh, okay.
All right, so were you able to figure it out? So if I were to do my visual right here, right? If I were to do so if I were to keep 8 months as 8 months divided by 12, right? Because we need to keep it in terms of years. Okay, so you can just keep it as 8 and just make sure that you divide this by 12 because we are not looking for 8 years, we're looking for 8 months. And we need to convert it in terms of years.
okay, so, I mean, if you divide 8 by 12, that's .67. I mean,
Yes,
I'm
you,
not sure what you're at
yep,
all.
yeah. You're gonna get
Oh,
like
that
this
is
number right here. That is correct.
Oh, yeah, okay.
And if you exactly if you multiply it across, you're going to get 15,917.
Yeah.
Oh. Oh, okay.
You're getting the right answer. You're just thinking it's wrong, and so you're double guessing yourself.
Yeah, that's, cause,
I do that. I do that a lot too.
yeah, cause this is, wow, okay. So now I mean, now I'm really thrown off, cause how in the world would I transfer? So if I take .0 or 0.666667 or .67 is what I got,
Mm-hmm.
and do that times, wait a minute.
You just multiply them across, just exactly how you just said it. You just multiply this long number by the rate and by the principal.
By the rate and principal, okay. 3.49 plus the principal is 8.415. Well, that can't be right. I got 684,153.
You're close. You're close.
0.01.
Are you solving for the future value? Or are you still calculating the
I'm
interest?
trying to get for the- Yeah, I did the interest, plus the, let me do, the interest. Oh, wait a minute.
You're doing the future value.
I know. I thought you were calculating the interest for the longest time. So, Andrea, it's really easy. All you need to do is add two numbers together.
Yeah.
So in this case, to solve for future value here, so I'm gonna write FV. Okay, is going to be equal to principal. So your principal plus your interest. Okay, what is your principal?
Principal is 684,150.
All right, and you're gonna add that to what is your interest that you solved for?
The interest is for 159.
Not 159.
You have the right number, Andrea.
That's what I'm messing up. I don't have the right, interest.
No, you solved for the right interest. You've already solved for the right interest. But you're reading the number wrong.
Yeah.
So I've got 15,000.
15,000.
Okay.
Yeah.
Yeah.
Exactly.
89.
917.89.
And then you're gonna get
The principal.
mm-hmm.
6841150. That number can't be right. I've got
Don't
Six.
double guess yourself.
but I've got that comes up, this is too, wait, let me do this again, that can't be right. Mhm. Okay, I've got the, 684,150 plus the 159.89. I'll come up with 70,000. That can't be right. I'd come up with,
Yeah, but just finish your answer.
700,000,
$67.89. Right?
I come with 70006,789.
That is correct.
That's correct.
Oh, that is right?
Yeah. Okay, Andrea. I don't know how else to say this, but think about it. If you're at 684, right? We'll round that to $684,000, right? And you're adding an additional 16,000.
Right,
You're already close to 700,000.
right. It just seemed like such a big number, I couldn't,
Yeah, but look at what you start. But think about it. If you started off with $600,000
right,
and you're adding an additional 16,000 on top of that,
right.
it only makes sense that it has to be a large number.
Yeah, and it is, yeah, that's 700,067.89. Okay, I just
Okay.
knew that couldn't be right, and that's what was confusing me, because I'm like, this can't be right.
What makes you come to the conclusion that it couldn't be right?
I think I thought it was just too much, but I think I really it wasn't sinking in. I'm dealing with $684,000 or $100,000.
Yes. Okay. All right. So let me see. Okay, so right now it's 3:30. Do you need to take a break, Andrea?
I think so.
Okay, no worries. Okay, so we can go ahead and take a quick break right now, and then we'll come back and finish off the rest of the we'll come back and finish the rest of the